Welcome to GRE. I'm your host, Keith Weinhold. Why do you or anyone need a turnkey real estate provider? Can't you yourself find, fix, and flip a property, find a tenant, and manage a property yourself? We'll answer that and so much more as we talk to who may very well be the first at-scale income property providers in the entire nation today on Get Rich Education. With JWB Real Estate Capital, Jacksonville Real Estate has outperformed the stock market by 44% over the last 20 years. It's proven to be a more stable asset, especially during recessions. Their vertically integrated strategy has led to 79% more home price appreciation compared to the average Jacksonville investor since 2013. JWB is ready to help your money, and to make it easy for everyday investors. Get started at jwbrealestate.com/GRE. That's jwbrealestate.com/GRE.
You're listening to the show that has created more financial freedom than nearly any show in the world. This is Get Rich Education.
Welcome to GRE, spanning the Americas from Nova Scotia's Bay of Fundy to the rugged archipelago of Chilean Tierra del Fuego and across 188 nations worldwide. I'm your host, Keith Weinhold, and this is Get Rich Education. They want you to think in terms of debt-free, but you are a bigger thinker than that. You want to be financially free. Debt-free people want their home and rental properties to be paid off free and clear. Financially free types like us build wealth with leverage. Have the right strategy, align with the right team, and then don't sweat it. The tenant and inflation passively pay down your loans for you. And then rather than you trading your time for dollars, racing to get your properties free and clear yourself, now you can live your life free and clear. I mean, why would you do life any other way? Hey, well, the U.S. Census's recent report told us that the top 5 states people moved to in the past year were, number 1 was Florida, second was Texas, and then North Carolina, South Carolina, and the 5th most moved to state is one of the 2 states that we're going to be focusing on today, and that's Tennessee. More to come there, but I want to share with you the results of our latest Instagram poll with you, the real estate investor. The question that I asked there was, how do your tenants pay you rent? What's the payment method? And there were 4 selections. Here were the results. 0% pay with Bitcoin. No tenants are doing that for you. 4% pay with a different type of cryptocurrency, strangely. 30% of you said that your tenant pays you with either Venmo, Zelle, or the Cash App, which I will call digital first payment platforms. All right. So again, that was a 30% proportion of the way that tenants pay you rent. And the number one way that you told me that your tenants pay you the rent is by far with a bank account or a debit card. And that is a whopping 65% of you are having your tenants pay you that way. I was a little surprised it was that high. I thought it could still be the number 1 payment method, but I didn't think it would be that high. So I'll call that the legacy banking system. With a bank account or debit card, 65% of rents are paid that way among this sample size on our Instagram poll. Yeah, nearly 2/3 are still using the legacy banking system. And in some ways I get that. Bitcoin is still pretty volatile for a means of payment for most people. Oh, and our Instagram handle is plain and simple, Get Rich Education. We are pretty consistently branded that way across social and really everywhere else. Now, being in real estate for as long as I have, most every property provider, they have some hiccup or some tenant relation problem or some investor relation problem now and then. And I end up hearing about it a lot of times. It usually has something to do with property management. And property management is so hard to get right because they try to please 2 antagonistic parties, both you, the investor, and your tenant. But the provider that we're talking with today have perhaps the best record of any provider that I can think of. And between that and their low prices and their high rents and their customer service, they are just a giant attraction to both first-time income property buyers and repeat buyers. We're talking about Mid-South Home Buyers of Memphis, and their website is midsouthhomebuyers.com. In fact, they're so successful that I've learned that other turnkey real estate companies have tried to study them and see how they do things. We'll share with you how they do things right here today. And now we're really going to key in on acquisitions here, acquiring that distressed property. So what they do is they identify and acquire a frankly ugly property, not just any property, but the right ugly property, and then they totally rehab it and place a qualified tenant in it and sell it to an investor like you or me, and then they manage it for you. But are they doing a disservice to society by competing against wannabe first-time home buyers? Are they taking an attractive entry-level home off the market? No, they are not, but I'm going to ask them about that, and we'll see how they turn around a neighborhood and so much more. Terry Kerr is the founder and president of Mid-South Home Buyers. They're based in Memphis, Tennessee, founded in 2001. That's back when he fell in love with making ugly houses pretty, and he set out to master that business of passing bargains on to bargain hunters, just like he still does today. And he's flipped more than 4,000 houses. They've got their own property management company there. And his longtime investment coordinator, Liz Brody, is also such an expert in knowing specifically what real estate investors need that she often goes and speaks publicly about it as well. Mid-South Home Buyers is a professional company. As far as we know, they're the oldest turnkey provider in the United States. And I have been inside their Memphis office, their warehouse, and their expertly rehab properties myself. Few measures could tell you about the longevity of our relationship than realizing that this is GRE Podcast episode 438, and they were here in episode 9. Terry and Liz, welcome back out of the show.
We're so happy to be here.
Thank you so much. So glad to be back, Keith.
We love being here.
Terry, I want to ask you about acquisitions in a minute. But first, Liz, I know that on one of your prior show appearances here years ago, you were dating someone, and that certain special someone heard you on the show here. Tell us about that.
My 18-month-old son, Rhett, has a little bit to thank you for, Keith. But yeah, my now husband had known that I worked for Mid-South Home Buyers. We had met online, as many people do these days, and he was preparing for our first date, which he will tell you he was extremely excited for. And he found your podcast and listened to it, to the episode we were on, and apparently thought I was pretty smart and pretty cool. And here we are many years later. And so thank you, Keith, for helping me make that good first impression before we'd even met.
He would become your future husband you were dating at the time. And yeah, he listened to the show as he was getting to know you and thought, oh, she's pretty smart and pretty articulate as well. I'm impressed. So I never thought of the GRE podcast as a matchmaking service, but hey, there it was. So, well, we're talking about love here, I guess. And Terry, your love more than 20 years ago was really with loving making ugly houses pretty. And when we think about making ugly houses pretty, that starts in acquisitions, with you acquiring a distressed asset. So tell us about acquisitions in today's environment.
Just like we have, forever and a day, we have to look at a lot of houses to find one that works. And nowadays, more than ever, we are finding houses that have been, distressed and need pretty much everything. And that's our bread and butter. That's what we like. We don't typically look for the lipstick jobs. We want something where we've got to gut everything. So then when we're done with the rehab, everything's brand new. And that's still the case here in Memphis as well as in Little Rock.
I think some of that pickiness that I love, or one thing I love, Keith, about setting our investors up with these houses is that it is actually a mandate from Terry that we do not buy a house that he would not proudly own in his own portfolio.
Yeah.
As some of your listeners may know, we have had a short wait list for our properties for many, many years, even though acquisitions has topped itself every year. And one thing I let people know, there's two sides to that waitlist coin. And one of it is a lot of happy repeat investors coming back for their second house, their fifth house, their ninth house. But the other piece of that puzzle is that our acquisitions team is passing on, Terry, I think the metric is about 25 houses when we looked back at it. Actually, we went and looked because they're kind of looking at what are our man hours on acquisitions.
Right.
And we're passing because of the busy intersection. We're passing because of the weird layout. And so one of the harder parts of my job is helping people pick a house. And it's because you have to split hairs to find a difference. And it's because any house that I offer someone has jumped through 50 plus hoops to become a Mid-South house in the first place. So you'll see a lot of sort of consistency on our website because of what Terry's having our acquisitions team do.
All right, we're talking about rehabbing distressed properties in Memphis, Tennessee, so that you, the listener, can get a picture of it in your mind's eye. We're typically talking about a detached single-family rental home that has a small yard. Liz, with what you're telling me, are you telling me that you pass on 25 potential acquisitions for every one that you purchase there, Terry and Liz?
For every one that we put an offer in on. There are people that sell houses at higher prices with less of a renovation than us, which equates to us not being the winning bid on every house we put an offer in on. As you know, Keith, we also have an extremely standardized renovation, where the roof is new every time and the kitchen is new every time. And one of my investors joked to me that you're basically buying the business model by the square foot. And I thought that was brilliant because it's kind of true.
And one of the things on the acquisition side that allows us to buy houses sometimes when we're not even the highest bidder is, we've developed relationships with real estate agents and wholesalers over the last 20 years, and they know that we perform and we're not tire kickers. And what happens a lot out there, and I know Liz wanted to touch on this a bit later, but there are a lot of laptop landlords that'll just put a property under contract and then they won't perform. And the agents and wholesalers get tired of that. And so a lot of times we'll make an offer on a property. And even though we may not be the highest bidder, we're close enough to where we will actually get the contract just because of our working relationship.
Yeah, we have what the media often calls laptop landlords outbidding some of these first-time wannabe home buyers. And a lot of the properties that you're getting and acquiring there, they're things that Fannie and Freddie and FHA won't touch or give a conventional loan on. So talk to us some more about that, and that you're really not taking inventory away from prospective first-time home buyers.
Keith, it is so close to my heart what Mid-South does for Memphis and for Little Rock. And I understand the frustration of first-time home buyers outbid multiple times by investors to then turn around and rent an overpriced, poorly flipped unit.
Yeah.
And the fact that we are the farthest thing from that and that I can feel so good about what we do means the most to me. So as you pointed out, first, there is no first-time home buyer swinging at the houses that we are picking up. They're the deeply distressed house at the very end of a cute street. They can only be purchased for cash, and then no one could live in them for 4 to 6 months while another huge cash infusion is put into them. Then we take that house. We have immediately elevated the property values of every owner occupant in that area.
Right.
A lot of working class folks that worked hard to buy that house and hated the falling down house at the end of the street. Then we add an affordable rental property to the total number of affordable rental properties available in our community. We rent that beautiful house out to a person with a good job and a clean criminal background check that is a good neighbor to those people. We treat that renter with dignity and respect. We fix things when they break. Our average renter stays almost 4 years. That's about double the national average for renters.
Congratulations.
And yeah, we work hard on that. Thank you. I love it. So literally, what could be better for the community than fighting blight, adding affordable, well-managed rental properties, and increasing the number of units available to people without sucking out inventory available to kind of your regular first-time home buyers. So sorry to get on my soapbox there, but there's some negative press about the way some people do things, and that's not us.
Absolutely.
Yes, you're doing some good work there. This is very parallel with what I advise people to do out there, provide good housing, and we can abolish the term slumlord. You might be acquiring a home that maybe it doesn't even have a roof on it, and it's just open air. That's how beat up some of these are potentially. So you come in and do a complete rehab, and that really props up values for the whole neighborhood. Now, you touched on it a little bit, but Terry, maybe you'll tell us more about just what the extent of that rehab is typically in Memphis.
Well, we like to say that we have an assembly line and the houses cruise down the assembly line and all the materials from our hardware store jump onto that property. So all the houses are going to get a new roof, new HVAC, updated electrical, updated plumbing, all new flooring, new cabinetry, the whole 9 yards. So when the resident moves into the property, it is almost always the nicest house they've ever lived in. And as Liz mentioned before, when things do break, we get out there and we fix the properties quickly to keep the quality of life high for the resident, which is what gives us that almost double the typical lease term.
Now, you, the listener, I know that you like a rehab property because it keeps your repair and maintenance costs down. But think about as well, when you don't have any repairs or maintenance, how that increases the quality of life for the resident, for the tenant there. They're not getting annoyed with things that are breaking either. And that's exactly what plays into your 4-year tenant retention, which makes a lot of sense. When we talk about rehabbing properties, there is time and there is materials. So we think about labor and materials, and both of those things have had so many disruptions, beginning with the health crisis about 3 years ago. And I know from being inside you guys' warehouse myself that you have the warehouse right there on site. And this helps you smooth out some of those supply chain bumps. And then when it comes to labor, you do such a volume of work that you can keep your labor busy and always working on something else so they don't go off and work for someone else. So you have a lot of this figured out up front, but can you speak to anything else about labor or supply chain difficulties with materials? Have they been largely smoothed out by now from this builder and renovator perspective?
They have been largely smoothed out, but one of the ways that we smoothed it out is by darn near doubling the amount of inventory that we carry. Because we know that the cost of inventory goes up. We've got great relationships with our banks that have partnered with us on this, and we've been able to purchase a lot more material. So we have more on the shelf. So when we see a supply chain issue coming down the pipe on a piece of material, we've got a much longer runway. So that's helped out a lot. One of the biggest things, as you mentioned, is labor. And one of the cool things is when our contractors that are doing the work for us go out to look at a property with our rehab project manager, Christy, they don't have to bid the job from a material standpoint, because we provide all the materials. And, on your typical rehabber is going to want to have a cost that includes the materials, and the rehabber contractor is going to make sure that they cover themselves by estimating high. And so we don't have to have our contractors take the time to estimate the material. And we also pay them weekly, so they're able to pay their people. And it's just an efficient model to where we get the labor done cheaper than we would elsewhere, because they're not having to take the time to bid the job and to wrangle the materials.
It's funny. I have talked to investors that have tried to, make this and turn it into a DIY turnkey. They learn about a place like Memphis or Jacksonville that has these favorable ratios of rent income to purchase price. And I know about people, including GRE listeners, that have flown to these cities themselves, and they try to do the acquisition and figure out labor and figure out materials and do that themselves and see if they can do it less expensively. And every time I've learned about that, that has not worked. They can't get the efficiency. They can't get the economies of scale. And I imagine that DIY turnkey investing sort of thing probably only became more difficult with all these bumps that were there for both labor and materials.
One thing I often explain to people, Keith, is that I have personally been buying investment properties from Mid-South starting in 2009. And let me tell you, if anybody could recreate the business model from scratch, it's going to be me. I've been in property management for 20 years. I literally live here full time, and I know how we do everything. And the coolest thing to me is that our vertical integration, the warehouse Terry is talking about, the fact that, I have full-time salaried licensed electricians and plumbers as my W-2 coworkers that I see at our Christmas party every year. What I'm getting to is that it would, aside from the value of my nights, weekends, and time with my family, it would cost me $130,000 to recreate a $120,000 Mid-South house from scratch, simply because I'm walking into Home Depot and paying one-time retail for a water heater, one-time retail for a furnace, hiring a roofing crew, for example, that has to pay to advertise and these other things. I mean, Terry, what does it cost us to put a roof on our typical size house?
$5,000.
That's going to be $7,000 for me. And so we're a healthy company that's going to be around for the next 20 years, but we have pretty slim profit margins per house. And so it's one of the neatest things to me. You go to the grocery store and the grated cheese costs more than the block cheese, right? It's if somebody has done something for you, if it's the easier path, it is almost always the more expensive path. And the fact that I can spend my nights and weekends with my family and get the cheaper version of doing it myself, it makes it fun for me. And I'm buying the exact same turnkey properties that my investors in Japan, Australia, New York, California, Hawaii. We actually, Keith, have investors in 17 different countries around the world and all 50 states. And I'm buying that living right here in Memphis. And we actually have locals in Little Rock and Memphis that buy directly from us as well.
Yep.
We've been talking heavily about properties, the acquisitions, and then the rehab of them. But as real estate investors, I think we know that the team of professionals that we surround ourselves with is even more important than the property itself. We've been talking about the strength of the team there with what you do. Another member of our team, we can really think of that as our tenant. A lot of people don't think of it that way. And a tenant needs to have a job in order to pay the rent. Otherwise, this rehab property that you get, in 2 years, is there going to be a tenant for that or not? And there's such a steady stream of tenant demand there in Memphis. So much of that has to do with the fact that Memphis is a distribution hub. We've talked about that on previous shows, how you have the Mississippi River there and all the barge and cargo traffic there. There's a huge confluence of rail lines in Memphis, interstate highways, and then, of course, the FedEx hub that helps make the Memphis International Airport either the first or second busiest cargo airport in the world. Memphis is often flip-flopping back and forth with Hong Kong for the busiest air cargo airport in the entire world. And those jobs, all those distribution jobs, are specifically grounded right there in Memphis. They cannot easily be outsourced somewhere else in the world. So with that in mind, and us understanding that steady tenant base that you get from all these distribution industry that's there in Memphis, there's more beyond, of course, just the distribution.
We are number one right now, even over Hong Kong, for busiest cargo airport. Tons of our renter. I think we do a lot of internal numbers. If you can't tell, 43% of our renters worked in some type of distribution. As you may know, Keith, we have Nike's largest facility in North America on the continent is in North Memphis. We're actually the largest renovators and managers in North Memphis. The Nike facility is the size of 42 football fields. It has 33 miles of conveyor belt, is a massive employer, also providing kind of good benefits. We have Amazon warehouses all over town. But one thing we're really excited about is Ford is opening a $5 billion with a B electric car plant. It's called Blue Oval City. You can Google it. It's in a rural area a little bit north of Memphis. But it is actually only a 42-minute highway drive from downtown. And most of where we're working is even closer than that. The city that the factory is in has a population of 615 people. And so the workforce is going to come from Memphis. And man, if you want to talk about the type of employment that our renters have, is that factory line. And really why Ford chose Memphis is for us having the labor base to support the factory. And it's just going to be great for our economy. It's going to be great for our housing. It's going to be great for our renters. And we're excited. We always had a ton of employment down south, meaning South Memphis, because that's where our airport is. That's going to add a lot of employment up north.
So this all increases demand for rentals, which is a contributor to rent inflation. Now, you operate in Memphis. A few years ago, you expanded west into Little Rock, Arkansas. We're going to discuss that after the break. But first, can you tell us about rent inflation that you've been seeing in Memphis and Little Rock?
I under-promised appreciation in the last 14 years because we just told everyone we like to stick to what we know and not get into the crystal ball game. But wow, has it exceeded what we expected. And I used to call rent appreciation and property appreciation kind of the icing on the cash flow cupcake, but it's just part of the cupcake now. I had the joy and pleasure of working for Mid-South for 14 years. And I started in 2009, which was basically the bottom of the housing crash. And we were saying that rents were going up every 3 to 4 years. And that was right. And then that slowly became every 2 to 3 years. And it's just been contracting. And then at the same time, the percentage of that increase has been going up. And we're able to do that while still being just slightly under market, still sort of being that nicest house for $5 less than the competition. So we're not doing that by wringing every last dime out of our renters, but while staying, competitive.
Absolutely. And another one of the things is, since we've been around for a while, Keith, we get a lot of referrals from our residents. And since we've been doing it for about 20 years, now we have folks that were renting from us and now their kids are renting from us. So it's nice.
And even kind of dovetailing back to the warehouse and some of our expediency with repairs and stuff, we ask every renter that comes to us why they are leaving their prior landlord. And the answer is, my landlord won't fix anything.
Yep.
Over and over and over again. I think Memphis, particularly because it's so well known for its cash flows, that you get more kind of fly-by-night property management companies, people trying to manage long distance from the coast, or people that overpaid for under-renovated property long distance and are frustrated and not wanting to fix stuff anymore. So yeah, it all kind of fits together.
All these in-house efficiencies contribute to the fact that you can provide a better product for something a little less expensive than the competition. And that's been such a profitable and smart model that's helped a lot of people that you took that west to Little Rock a few years ago. And thank goodness when you expanded to Little Rock, you kept your name Mid-South Homebuyers the same, because to call it West Mid-South Homebuyers would just be completely confusing for everybody. You're listening to Get Rich Education. We're talking about real estate investing in Memphis and Little Rock with Mid-South Homebuyers. Before we come back, I'm your host, Keith Weinhold. GRE listeners can't stop talking about their service from Ridge Lending Group, NMLS 42056. They've provided our tribe with more loans than anyone. They're truly a top lender for beginners and veterans. It's where I go to get my own loans for single-family rental property up to 4plexes. So start your pre-qualification and you can chat with President Chaley Ridge personally. They'll even deliver your custom plan for growing your real estate portfolio. Start at ridgelendinggroup.com. Mid-South Homebuyers, with over 2 decades as the nation's highest-rated turnkey provider, their empathetic property managers use your return on investment as their North Star. It's no wonder smart investors line up to get their completely renovated income properties like it's the newest iPhone. Headquartered in Memphis with their globally attractive cash flows, Mid-South has an A+ rating with the Better Business Bureau and 4,000 houses renovated. There is zero markup on maintenance, let that sink in, and they average a 98.9% occupancy rate with an industry-leading 3.5-year average renter term. Every home they offer you will have brand new components, a bumper-to-bumper 1-year warranty, new 30-year roofs, and wait for it, a high-quality renter in an astounding price range, $100,000 to $150,000. Get to know Mid-South. Enjoy cash flow from day one at midsouthhomebuyers.com. That's midsouthhomebuyers.com.
This is author Jim Rickards. Listen to Get Rich Education with Keith Weinhold and don't quit your daydream.
Welcome back to Get Rich Education. We're talking with Mid-South homebuyers Terry Kerr and Liz Brody, based in Memphis. And a few years ago, with the success that you've had with helping people and investors and tenants and neighborhoods in Memphis, you expanded west. It's about a 2-hour drive. I've made that drive over there to Little Rock, where you're building new right there in the center of Arkansas. Tell us about why you're building new.
Well, we've been asked for years by our investor friends if we're going to do new construction, because we know that there's some new construction direct to rental going on across the country. And we wanted to do it, but we wanted to make sure to do it right. So it took us a while to build the right team. The Little Rock market was prime for it. And so we pulled that trigger about a year ago. And so we've been developing some land. We've got 37 houses under construction right now, with another 60 online to come to start rolling on right after that. And yeah, so there's demand for it. And then also, sometimes it's hard to find inventory. And if you can't find inventory, then why not build it?
It's the new construction pipeline has helped really shorten our wait times, which our investors have been really excited about. And the 1 year that Terry's talking about is for the new construction, but we've been in Little Rock for almost 4 years.
Yep.
And some of the ways that we did that expansion, I think, was really neat and kind of unusual. We actually paid for 27 long-term multi-year career employees with Mid-South to move with their children and families to Little Rock. My best friend from college, Jen, that had worked for Mid-South for a long time, her and her husband, Bloss, who also worked for us, moved to Little Rock 4 years ago. So we've been in the market for 4 years, but the people walking the houses, renovating the houses have been, frankly, we're kind of perfectionists, and we kind of wanted to take that company culture and make sure it was present there. And then about once a week, some department heads, often maybe every other time, Terry, Memphians here, get on our bus and roll out to Little Rock. They're walking every new acquisition. They're walking every finished rehab. And so the amount that our experience in Memphis is playing into that these last 4, almost 5 years in Little Rock, I can't overstate it. And then the new construction stuff is just an additional line of awesomeness.
Yeah, I just got back from Little Rock this morning. Myself and our COO went and cruised through and did some blue tapes and quality control on the new construction projects. It's awesome. We're super excited about it.
They're really beautiful. Actually, the very first one is on Lew Street, I believe, LEW. It's still up on our website right now, if anyone wants to see an example of what's going to be coming out. But the granite countertops, the stainless steel appliances, the gorgeous floors, it's really beautiful new construction. We're excited about it.
The influence that you're having, you've now basically moved a small village interstate from Memphis, Tennessee, over to Little Rock, Arkansas. You don't often hear about that.
Oh, it's fun. It's fun. And everyone comes back every quarter. We have a company party and everyone comes back for those parties. So we get the band back together pretty regularly.
It's true. Well, actually, one of our upcoming investor tours, our group monthly tours, is on a warehouse party day. So if any investors come to town on June 9th, they're coming to our warehouse party.
Awesome.
Yeah, well, you're really helping fulfill an American need out there in Little Rock as well, building new, predominantly single-family homes out there. We just have an overall housing shortage in America. And then the entry-level homes, often the ones that make the best rentals, there's an even greater shortage of those. So you're really fulfilling a need there. And of course, Arkansas, at times, I have seen where it has been named the most landlord-friendly state in the entire United States.
It's super business friendly. Even the cost of an LLC there is even lower than Tennessee, and Tennessee is insanely business friendly. The landlord tenant law, as my Californians and my New Yorkers tell me all the time, it makes a huge difference in how a rental property performs. And luckily, the law is on our side.
Investors have been so attracted to your model for such a long time. Part of that is because you have a really affordable price point that's attractive to both veterans and beginners. So just tell us roughly about those price points. You're doing a lot of renovated properties in Memphis and new build ones in Little Rock. So what can we expect just roughly an average for both rents and purchase prices in each market?
We do renovated in Little Rock as well. So you'll have both streams there. Memphis is going to be 95,000 to 150, 160,000 on the single family home side. We'll get some occasional duplexes. They're going to be in the 180 to 220-ish. Little Rock runs kind of just a little bit more for what is essentially our same sweet spot, both in rent and in price. And on the price side for Little Rock, I would say probably 110 to 170,000. On the
and the rent's about 10% higher as well.
Yes, exactly. The rents and prices are stair-stepped identically. Rents for Memphis, man, they keep going up so much that I have to think backwards and make sure I'm not quoting yesterday's numbers. But I'm going to say for Memphis, we're talking about $780 for that $95,000 house on up to maybe $1,400 on the upper end there.
Right.
And then Terry, on the new construction price to rents, maybe you can tell us a little bit about that.
The 3-bedroom, 2-bath, 1,300 square foot houses that I was walking yesterday, the rent's going to be between $1,300 and $1,400 with the sales prices somewhere around the 190 range. So very affordable. They're going to fly off the shelf. This project that we're working on right now is real close to a school. And there is a full-size soccer field right in the middle of the project, gazebo, barbecue grills. It was cool. I'm excited.
Yeah, might have been hard to leave this morning. Well, with rents and prices like that, those are truly the numbers that work for investors. In fact, price points are so low that even though I often discuss the benefits of financing and leverage, some might choose not to use one of their Fannie Freddie loans here and pay all cash. Because of the attractive model that you have, I know that you do have wait lists, and you have wait lists for both cash buyers and finance buyers. Tell us about that.
We work with both all day long. Probably about 80% of our investors finance, about 20% pay cash. So finance is a very typical path, but actually kind of to touch on what you said, Keith, I have a fair amount of folks that use their Fannie Freddies for their local high cost of living markets.
Yeah.
So they're saving those big loans for their properties in, again, California, New York. And then with our houses, they're doing the 95,000, 150,000, buying them outright. And of course, as you know, you can refinance a house at any point along the way. I think of them as little brick piggy banks. You can tap it the day after you close. You can tap it 2 years down the line. So it's not like that option ever leaves the table. And wait times are a tiny bit shorter on the cash side, but they're super reasonable on the finance side. And we'd love to talk to anybody, however they're wanting to do it.
Yep, I think it's what we're around 6 months is the wait time for somebody to buy when they join the wait list now.
Correct. Yep. And a little bit shorter than that on the cash side. So
it's interesting to know.
We have a lot of international buyers. They don't have access to Fannie Freddie loans for about a million reasons. We work with self-directed IRAs really, really frequently, and a lot of QRPs, retirement funds. And those can kind of access non-recourse loans, but depending on how familiar you are with non-recourse, they're expensive. They have high loan minimums. They have high interest rates. You know, if a bank doesn't have recourse, they're going to find it other ways. And so my IRAs tend to buy all cash as well. Some people just like that comfort of knowing nobody else owns it but them, and and so on.
Well, you're so proud of what you do there, and you should be. You want people to come see this. In fact, you're doing monthly investor bus tours. Tell us about that.
We wish more people would come visit with us. So probably about 5% of the folks that we get to work with actually come visit us. So it was a while back, Liz was like, look, we need to incentivize folks to come visit. And so we do. So anyone that comes to visit us, we give them $500 off of their first purchase, because what we know is if we get to visit with someone, we get to develop the relationship and get to know them. And it's just nice. So yeah, we're doing a investor open house, if you will, once a month. And we got a Sprinter van. It holds 12 people. And we just hop on, ride around. Liz shows them an ugly house before we start the rehab, shows them one in the middle of the rehab, shows them one at the end of the rehab. We cruise by and visit our leasing and resident retention office. It's a nice time.
It's really cool. One, Memphis is legitimately a fun, wonderful city. We have an incredible food scene, art scene. There's so much to do here. Two, I'm not a CPA, but for a lot of folks, it's going to be a tax write-off the whole trip. we're going to give you $500 towards the closing costs on your first purchase. And then it just seals the deal. It pushes people's confidence through the roof. I thought it would be a lot about seeing the neighborhoods, and it is, but the number of people that kind of say the vibe and the happiness in our office is part of it for them as well, which is kind of a neat thing to hear. This is a real kind of subtle, funny thing about Mid-South, but I often say Turnkey is like getting married. Like, this house is going to make you the most money the longer you own it. So, like, by definition, if this works out, we're all working together for 10 or 15 years.
Right.
And a funny thing about Terry is he makes this really good, great place to work. So, Keith, you know, I've been with Mid-South for 14 years. My investors have a direct point of contact after they close, kind of a concierge for the PM side, the property management side. Lisa's been with us for 13 years. Matt Van Horn has been with us for 12. It goes on and on. Well, you meet these people. You meet me. You shake our hands when you come to town. And that's who's emailing you 7 years later. I've actually had investors that tell me, you know, oh, I'm buying from you guys. I love y'all. And I'm buying from these folks in, you know, Detroit, Texas, just whatever. And then a couple of years in, I get an email. Hey, Liz, I've decided to concentrate everything with you guys. Can you tell me where I am on the list? And I ask what happened. And then, Keith, I probably had this conversation 5 times. I hear everything was going great. And then Janine left. And I didn't know she was the linchpin to my entire situation out of town. And they've never gotten their feet back under them. And so I know that's kind of subtle, but I guess it adds value to that visit because you're meeting folks you're going to be working with for a really long time. And then the final thing I'll say on it is just, I know that most of the cities our investors live in don't have neighborhoods as cute and as nice at these price points as we do. And I just really like to show folks how nice a $120,000 neighborhood is in Memphis here.
Yes, there is plenty of things to do on your visit besides just the investor bus tour from Beale Street to Graceland. And yeah, Terry and Liz, I wouldn't feel slighted that 95% of people choose to buy without visiting. It just conveys how much trust they have in you. Before I ask you if you have any last thoughts, if you, the listener, want to learn more, you can get started at gremarketplace.com/Memphis. Yeah, with those tours, you can tour the warehouse and their extensive facilities. You can meet their key team members and see their operation and the efficiencies that they offer, tour a number of properties in various stages of the rehab process, like you mentioned. That's really interesting. And just get a good overall look at the neighborhoods that they work in. And like they said, if you're considering making your first investment there, you'll get a $500 credit on the closing costs of your first property as a way of saying thank you. Any last thoughts, Terry or Liz?
Anyone who's considering, shopping for turnkey properties, obviously we want to work with everybody out there, but Liz and I designed and wrote every word on our website about 13 years ago, and it teaches folks how to shop in any market. And so, feel free, you guys, to check it out and learn how to kick the tires anywhere, but we want to work with you guys.
Keith, my only thought is just that I'm so grateful for how long we've gotten to work together and what you do. Your listeners are passionate about this show. I talk to your listeners all the time and they love you. And I follow your Instagram. I follow you on Facebook, and I learn from your social media all the time. And so I'm just grateful we met you all those years ago.
Heck yeah.
Yeah, being this geography guy that I am, I'm thinking I'm posting too many maps on my personal social media for most people.
I love the maps, Keith. They're great. They're great.
Well, you guys are helping put Memphis on the map. So thanks so much for coming back onto the show.
Thank you, Keith.
Thanks, Keith.
Yeah, well, it's interesting that with the supply chain bumps wrought by the pandemic, that they doubled their inventory, and they also keep that inventory right there at a warehouse that they own. That way they don't have to hope that Lowe's or Home Depot keeps items in stock. And doubling their inventory and increasing the volume of business has reduced the wait list length for investors. And these are the pros, these are the professionals that you want to get to know for a long-term relationship. They are our longtime, in fact, probably our longest tenured provider on GRE Marketplace at gremarketplace.com/Memphis. Hey, a lot of great shows coming up here on the GRE podcast, including the star of HGTV's hit show Flip or Flop, Tariq El Moussa, will be here with us. The affable real estate guys, Robert Helms and Russell Gray, will be here on the show with us soon as well. On another episode, renowned housing intelligence analyst Rick Sharga will join us soon too. And look, you've only got so much time in your life. There are only so many podcasts you can listen to, so choose carefully. There are only so many places you can invest in cities that you're going to want to invest in throughout your life. So then, really good investments should be painfully obvious. Otherwise, they are not worth making. Real estate pays 5 ways with a market, team, and properties that are proven. And gosh, I wish it were this easy when I started out in real estate. All the stuff I had to figure out myself. I think you can find Mid-South homebuyers wherever you like and get started with them. They are our chosen marketplace provider at gremarketplace.com/Memphis. Until next week, I'm your host, Keith Weinhold. Don't quit your daydream.
Nothing on this show should be considered specific, personal, or professional advice. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions of guests are their own. Information is not guaranteed. All investment strategies have the potential for profit or loss. The host is operating on behalf of Get Rich Education, LLC exclusively.
The preceding program was brought to you by your home for wealth building, GetRichEducation.com.